Starting on January 1st, 2024, a new rule by the U.S. Treasury's Financial Crimes Enforcement Network in relation to the Corporate Transparency Act requires that owners of LLCs and corporations file what's called a beneficial ownership information, or a BOI tax, with the U.S. Treasury within 90 days of registering their business. This has to be paid by December 31st, 2024. Your tax preparer should have told you about this. This applies to LLCs, partnerships, and corporations. It does not apply to sole proprietorships. Enjoy the episode.
Paul Rosenblum is a bookkeeper, not an accountant or a CPA. Although the information in this podcast comes from professionals, it's meant to give you enough knowledge about these subjects to have a meaningful dialogue with your tax preparer about bookkeeping and taxes.
It's the last episode of the year, so season's greetings and Happy New Year to everyone who listens to this podcast. And thank you. This episode is going to be based on the 12 Days of Christmas song, or the 12 bookkeeping things that I think about and act upon in December. Just a hodgepodge of random things about bookkeeping and clients that go through my head in December and moving into tax season that officially starts in January. I'm trying to put all my ducks in a row for tax season. Paul Rosenblum. Before I begin, thank you for signing up for the newsletter. I have tax information and other related bookkeeping info there, but recently I've gotten more personal about who I am as a person, so please sign up for the newsletter at paulrosenblum.substack or use the link in the episode notes here, leave comments, and share the newsletter with others. Okay, here we go, in no particular order now. Number 1, taking on small clients at the end of the year. There are always new clients who come to me in November and December of every year to have me do their bookkeeping for that entire calendar year. I look at how much work and how much time it would take me to get the year done very carefully before I take them on. Number 2, prioritizing which clients to get 100% completed first. Since partnerships and S-corporations and LLCs filing as S-corps are due to get filed, or at least get an extension filed, by March 15, those companies come first in terms of completing 100%. However, because of 1099s being produced in January of every year, at least the expenses for every company must be input so reports can be run showing all possible 1099 recipients. Number 3, reading up on any new IRS tax laws that I might have missed that pertain to the current tax year. For an example, if there have been any tax changes, such as coffee and snacks for the office now being 50% deductible rather than 100% deductible as in earlier years, I must make sure that they are reflected in the correct category in all the companies before the books are forwarded to the tax preparer. By the way, bottled water is still an office supply 100% deductible in the U.S., but coffee and snacks that you bring back to the office have been only 50% deductible since the beginning of 2024. Make that a sub-account of business meals, and you can call it coffee and snacks. Number 4, going through every set of books to make sure that there are no financial transactions in bank accounts and credit card accounts that have not been reconciled before giving the books to the tax preparer. This could affect the balance sheet and or the income statement or profit and loss. Number 5, going through the balances on all loans to the business to make sure that the balances reflect correctly. If the client is a partnership or a corporation, the balance sheet is reported to the IRS. So loan balances reported must be correctly reported. Number 6, making 100% sure that there are no financial transactions left in the miscellaneous account, or what I call the ask account, because I don't know what the category they belong in. Sometimes, even after asking the client, I still don't know the correct way to categorize, so I will let the tax preparer know that there are 1 or 2 transactions in that ask account for him or her to determine where they should be going. So sometimes there are leftover ask the client transactions, but only for very specific reasons. Number 7, make sure that the filing cabinets are cleared out except for the last calendar year of statements, emails, and anything else I print out to make room for the upcoming year's paperwork. I print out bank and credit card statements and file them when I'm done with them. I use recycled paper and recycle it again at the end of the next year directly from the banker's boxes that I use to archive statements. Number 8, send emails to all the clients who I want to raise fees to give them plenty of warning. I do that at the end of November or the beginning of December. Number 9, remind all clients that they need to keep receipts and have them organized for any possible audit in the future. In the U.S., the IRS isn't that strict on receipts. If audited, they will ask to see receipts for everything, but if you happen to have 25% of the receipts for a particular category, like business meals, they will not throw out the remaining 75% of the expenses with no receipts. They will disallow some, but not all, even without receipts. They base it on trends and the consistency of each transaction that is assigned to business meals for this example. For my Canadian friends, my Canadian bookkeeper friend tells me that the Canada Revenue Agency, the CRA, is very strict about receipts. No receipt, no deduction, period. So bookkeepers there won't really do bookkeeping, or at least she doesn't, without each and every receipt provided to them by their clients. Smart. So for all U.S. taxpayers, we could get a break unless the auditor is in a bad mood that day and won't give you a break without any receipts. By the way, receipts don't have to be in their original paper state. They could be scanned into a computer or an app online as long as they are readable. Number 10, making sure that I order all the reams of paper, toner, coffee, tea, snacks, paper clips, binder clips, highlighters, etc. that I need to make sure that I don't run out during the upcoming tax season. The last thing that I want to be doing during a very busy tax season is to take time out of my day creating an order online for toner that I'm about to run out of. Number 11, I also personally look at every key card that I have for clients' bank accounts, and if the numbers are starting to fade, I have the client call the bank and get them replaced. I don't need, in the middle of tax season, to have a key card quit on me and not be able to get into their bank account for the information that I need. Number 12, remember to get my haircut in the last week of December, pretty short, so that, again, I don't have to worry about that during tax season. And since this isn't the exact 12 Days of Christmas song, I have to be different, so let's add 2 more. Number 13, take my wife out to a really good fancy dinner before the end of the year and a good movie, and pretty much say goodbye until April. No, I'm not 100% serious here, but she knows that I will work more hours and most Saturdays and not want to do much on Sundays other than sleep, relax, and maybe watch a movie. Number 14, get extra sleep. Get in that mind frame and get my head into the official tax season. Break out the sports jacket and the good pants just in case the client wants to see me in person. And yes, I almost forgot. Remember to go out and find a partridge in a pear tree. Happy New Year to all. On to 2025.